Cryptocurrencies have been in the spotlight of the SEC and Congress for a lack of regulation and for how to best protect investors. Judge Analyst Torres of the U.S. District Court of the Southern District of New York has been presiding over one such case, whether Ripple's XRP token can be classified as a security. On Thursday, Judge Torres provided her nuanced view, saying that the XRP token can be regarded as a security for institutional sales after it passed the Howey test several times. However, the court ruled that XRP cannot be a security when it's being sold to the broad public. So what could this mean for the future of crypto regulation? We're joined now by Berenberg Capital Markets Senior Equity Research Analyst Mark Palmer and Delta Blockchain Fund General Partner Kavita Gupta to discuss more. Great to have you both here with us today. Mark, you're here in studio with us. You know, just your initial reaction, even as you heard this particular case ruling, or at least the opinion of the court come down from the judge.
Well, I view it as a split decision. There definitely were some aspects of this that were favorable for Ripple, but at the same time, there were certain aspects that were not favorable for Ripple, including the fact that it was found to be guilty of engaging in illegal securities transactions with institutional investors to the tune of several $100 million. But the main takeaway as it pertains to the broader crypto space and to Coinbase and the like, in our view, is that, number one, the judge did rule that the Howey test is applicable and should be used to determine whether cryptocurrencies are securities, and then things got a bit more nuanced in terms of the application of that, which we think her interpretation may be a little bit outside of the judicial mainstream. And at the same time, she stated that XRP could be viewed as being part of a securities transaction once it's actually used. The fact that XRP itself is not a crypto token, is a security, that doesn't really mean much if at the same time the trading of that crypto token is interpreted to be a securities transaction. So if you're running a secondary market or a crypto exchange that facilitates transactions that are in the secondary market, it appears that she's not addressing that. And there's specifically a footnote in which she says that she does not address secondary market transactions.
Yeah, I mean, there was a lot of sort of celebration on crypto Twitter yesterday. It felt like that, this is a blow to the SEC. This is a victory for crypto. And as Mark explains, it definitely feels more nuanced than that. So what do you think is the sort of reading in the community that should be as a result of this ruling?
So I was truly the way we look at it from the crypto community, right? So far, for the longest time, there has not been any rules. There has not been any direction. So the positive side of yesterday's hearing is that if it is getting pragmatic sales, which is through exchanges, which is through centralized or decentralized exchanges, is not a security violation of the same token. But at the same time, as Mark mentioned, doing it for institutional sales, mostly for speculative value, is the way the crypto industry has been thinking is, so the token itself cannot be a security and a not security at the same time. That means there is definitely a step ahead about how do you really place it in the market and how does the sales around it happen. So if it is really decentralized, then the same token is not security. And I think that's a big win, at least to have a clarity or towards the direction of a clarity that the same token cannot be a security or have to go through a Howey test. And I think that's a very, very positive side.
Even after having so many conversations and covering this space for a while, for a lot of end consumers, it can get a little bit muddled or confusing over time too. So how, even in these processes of trying to ensure that there's a safe way forward regulatory wise and framework wise for crypto and for blockchain more broadly, that there's still transparency that's at the core of this for the safety around how people can transact with or trade crypto at the end of the day, Kavita?
I completely agree with you, Brad. And honestly speaking, that has been one of the biggest frustration for the crypto community too. What deemed decentralized or centralized from the perspective of SEC. And I want to underline again, like we are talking about SEC who did, in a way, sign off to the IPO of the Coinbase, came back, listed some random companies or random tokens without giving explanation that these 12 and these 13 tokens are security. And now we are going back to the direction, what really makes them security and not the rest? And is the securities actually not even a token? It's the securities, the way or the means the retail customer gets to be part of it, or as a user or a speculative value. And I think maybe one of the biggest thing for the crypto community, including myself as an investor in the space since 2013, one of the biggest eye-opening for me is the direction not going to be about how we test, or is it about going to be the tokens created or centralized, decentralized, but the way it is placed outside for retail customers for their security. If that is the case, then it may not be even, then the regulations has to be expanded, and the standard digital asset regulations may not be applicable to it. So maybe everything what crypto industry has been saying, that we need extended or a new format regulations around it, is a very legible way and an ask.
Let's bring it back to specific reaction that we saw in the market. And I want to bring it to Coinbase in particular, which rose yesterday and it's rising again today, Mark. Should it be? Is the feed through positive?
I would question the extent to which Coinbase has rallied in the period after this ruling was issued, simply because I don't see this as being a clear win for Coinbase. One of the things that the SEC alleges in its lawsuit against Coinbase is that it has been operating illegally a securities exchange in which there are significant conflicts, because the company is simultaneously running an exchange, a broker-dealer, and a clearinghouse, which in the eyes of the SEC is rife with conflict and ultimately may only be remedied through a breakup of those functions. But I think that beyond that, the fact that the judge ruled on primary transactions involving Ripple, in which Ripple was distributing its XRP token through primary transactions, not secondary transactions, is a very important distinction here, because the judge effectively punted on the question of secondary transactions. And even within that context, she had a very interesting take on protection of institutions on the one hand and no investor protections for retail investors on the other, which is odd simply because securities laws were put in place specifically for the protection of individual investors. So with all of that said, it looks very much like the SEC is going to appeal this ruling to the Second Circuit Court of Appeals. It may ultimately end up with the Supreme Court, which is our expectation. So this is round one, and it's inconclusive.
How does this further impact some of the offerings that Coin has wanted to put out too, of its either own currency or for the number of currencies that are listed through Coinbase at this point?
Well, again, XRP was not one of the tokens that was identified by the SEC as an illegally traded security, i.e. a crypto token that was a security on Coinbase's platform. With all of those others, it remains a question. And yes, what the market is doing right now is reading through from the Ripple ruling to all of those other securities and suggesting that that they are now scot-free. We think that if you look at the Howey test specifically, one of the points there is that there's an expectation of profit arising from the efforts of others. According to the judge, in retail transactions, those others are the buyers on the other end of a transaction. They're anonymous. You don't know who they are. That's an odd interpretation of the Howey test as we see it. In most judges' thinking that we've heard so far, the expectation of profit based on the efforts of others in this case would be based on Ripple Labs and its promotion of the Ripple ecosystem. In the same way that if you buy IBM shares, you're doing so in the expectation of profit based on what IBM does as a company and its operating performance. The fact that this is looking at that transaction very differently, I think is something that needs to be considered.
Yeah. I want to zoom out for just a second here, and Kavita, give you the last word on this, because we have this case. We had yesterday Alex Mashinsky of Celsius, the founder of Celsius, being arrested and charged by the SEC. Where are we in this sort of crypto cycle here? You know, the fact that we're still arguing over these sort of definitional, foundational regulations at the same time that we are still seeing fraud in the system. What's the big picture?
It's a very good question, Julie. And I honestly believe that we are still at the very early stage. But being in crypto since 2013, I feel like at least the crypto has arrived the place where the mainstream media is really pushing to understand where does the regulation works. So we do have projects like 3AC and FTX and like the bad actors like any other industry. And the more regulations and the more clarity on where do we stand is really going to help and protect the retail customers, and also going to help and have the guideline of how founders and investors need to go into the place. Said that, I think at the same time, I also do believe what Mark said, that we are going to see the digital asset regulations in the Supreme Court. But the positive side, again, which I want to underline is decentralization a key, a way to distribute token is the key, the way of sales or the token itself, an instrument itself has to go through those regulations. Having a clarity of it will push the overall blockchain industry, which is still, I believe, in the early stage when we compare it to the tech industry, very similar to how privacy laws or encryption laws accessible to everybody is. My last thought would be here is clarity is great. Otherwise, US is already on the brink of losing some of the best tech from the blockchain community. And I don't think that's going to be helpful for anyone.
Mark, Kavita, thank you so much for your time here this morning. Berenberg Capital Markets Senior Equity Research Analyst Mark Palmer and Delta Blockchain Fund General Partner Kavita Gupta. Thank you.